for your new screen. But the EBITDA loss has now expanded to 555 crore versus 544 crore. And even at the bottom line, it's a marginal expansion to 625 crores. So down year on year, but up quarter on quarter.
Quick commerce is still burning because I've looked at the segmental breakup, and that's where the fight is, right? Can you take on the might of Blinkit or not? So in quick commerce, the loss is coming in at about 317 crores versus a loss of 280 crores. This is quarter on quarter. Q2 over Q1. So the quick commerce war is on. But in food delivery, they've done really well. The profits there are expanding to, I think, about 121 crores from about 67 crores. So food delivery, they're on track. It's about the big fight for quick commerce. The losses in the out-of-home consumption category, perhaps that's the dine-out. Mangalam will tell us some more, but perhaps that's that segment. That's where the losses are collapsing as well. The issue is obviously quick commerce and how quickly can they reduce the burn there. Okay, we've actually got Mangalam with us. Mangalam, why don't you tell us? So what's happening with the loss picture?
Well, the picture with the loss is largely led with investments because the company had said that, they are looking to add a lot more to their overall quick commerce, dark stores, etc. as well. So two things are extremely important in Swiggy to look at. The first most important thing is that how the overall revenue picture has come by. 30% growth is slightly higher than, its peers when it comes to the overall revenue growth. The second thing you have to look at is where is this revenue growth coming from? That revenue growth is coming in from the quick commerce business, where on a low base versus last year, the quick commerce revenue has actually grown by about 135%. The second thing that you look at is how the operational performance of the food business has been. So if you look at the food delivery, out here the revenue has been around 22.3%. That too, on a slightly lower base than Zomato. On a percentage basis, it's a tad higher than what, Zomato has reported. But out here, the heartening fact is both QOQ as well as year on year, the EBIT has increased. So if you look at EBIT in the food business, it's coming at around 122 crores, implying a margin of 7.7%. So that's telling you that on an operational basis, the food delivery business is on steady improvement. So long as the revenue growth continues out there and stays steady, margins will come by. The other thing is that in quick commerce, while the revenue growth has come by, remember the EBIT has stayed steady. So that means that the company is using all the excess money that they're making in their existing stores to go ahead and improve their dark store network itself. And these are numbers which have come in from pre-IPO. So post-IPO, with the kind of funds that they will infuse in expanding their dark stores, etc., will start reflecting from the third quarter itself. So short point, if you have to look at Swiggy's second quarter numbers, the food delivery operating performance has improved. There has been good revenue in quick commerce, but all of this over the near future has to tie up to operational improvement, and that is the question that we'll probably probe answers from the management.
Thank you. And there is a conference call today at 5 p.m. for Swiggy. And, Swiggy still has some ground to cover in terms of catching up with Zomato on quick commerce. So Swiggy's quick commerce revenue is 490 crore. And for Zomato, this quarter, same quarter, the September, it was a number in excess of 1,100 crore rupees. So Swiggy's quick commerce revenue is half of that of Blinkit or Zomato. So there is some catch up to do. And for Zomato, the quick commerce, at least at the EBIT level, had turned positive, while for Swiggy,